And good morning, Bob from Trade Genius here, 25th of February. And I think the market is giving us a tell here. And I'm going to show you something. So you see here in December, the market was drifting down into Christmas. And this happens a lot. You get the Christmas rally came early, probably because of Trump. And then it sold off into the end of the year. And then it just took off, and we know the story. And then in February, we've had this complete ramp job, okay? And a lot of reasons for it. That's not really my point this time. And money flow now is at extremes, and the stock market basically this week kind of stalled. And I trade XIV a lot, and XIV kind of tells you the future a little bit. And so in December, this makes sense to me. Market was going down, XIV was following it. Okay, volatility was picking up, risk was coming on, traders were a little nervous, and then XIV followed the market higher, or some would say led the market higher because people were selling volatility and using it as fuel to drive the price of the shares higher. But something interesting happened as the market ramped this week and stalled this week, or some say was not allowed to fall this week, is XIV was falling. In fact, it fell 10% from from its highs. And if you know anything about XIV, they try to keep an average maturity out 30 days, looking into the future. And what a lot of traders have been doing is they've been selling the front month short and buying the back month behind it long, creating a steeper contango, which forces the buyers of or the sellers, actually should say the managers of the XIV product, they have to be selling volatility to keep the maturity in line, and when they do that, it raises the price of XIV. Well, that stopped, and to me that's very interesting. And this was a Friday move, but this thing dropped all the way down to the S2, which was 61.35, and this is kind of normal. When you wait till you see people who've been trading only for the last couple of years haven't seen XIV going spastic. And today was a spastic day. It was a Friday, and so you expect traders to be bringing in risk going into the weekend. So that's why it popped. That's why we bought XIV at the open, and basically made 2% today on the trade. Those who traded the UVXY options against it made 14-15% today. And so what I'm saying here is that I think the vol game is ending. And if you look at here, you have a falling wedge in process, and this is twice now they tried to take it up over that wedge, This time it did penetrate it and came back in, and one of these times it's going to just go through and stay, and then we get a follow through day, and the VIX is going up 40%, and that'll crush the market because there's a lot of people in a trade, that they short volatility and use it to buy the market. There's other traders that use volatility as a barometer of how much risk they're allowed to take in the market with a long exposure. And if VIX starts to rise, everybody has to bring in their books, and it just will cascade on itself. And everybody's leaning on this trade hard. This is like people thought they found a gold mine, and it's been working. But when it stops working, it is nasty. And you're going to get a trade. You're going to get, what I think is going to happen is we're going to look at 2011 here. Let me show you 2011. And it's just going to burn people and burn people and burn people till they probably never want to touch this thing again. And then it'll be a great opportunity to buy again. Let's see if I can go back. Weekly will be enough to show you this. Yeah. So here we go. So take a look at this. Okay. Um, we're going to get a move, and we're going to get a big down move. All right. That's not going to be recovered. and people are going to be buying this dip like crazy because it's a lot of fun, and it's just going to keep falling and falling and falling and falling and falling. So my tell for you is to, if you get a weekly red wick, and I should say body on XIV, we're going to get some follow through on this. This literally fell 80%, guys. 80% fall. Now the good news is that when it finally double bottomed here, it went up 400% in 5 years. So all's not lost. It's just the way the traders trade. So this is risk on right here. They didn't have XIV in 2008. I could just imagine this thing probably fell 99%, because the VIX shot up, I think up to 80. So just be aware of that. And I think the market's telling us, that the big money is repositioning, and for you is just watch the VIX. If it closes over 12 and holds, and you get a follow through day higher, then Katie bar the door, because you're going to get weakness. And this is the only thing this is what they've been using to drive the market higher. It's been a total derivative play, and the yen has stopped. There's nothing more to short. The top 50 stocks have already been jammed. The tech stocks have already been jammed. Biotech stocks have already been jammed. So there's very little left, and I think they're sneaking out the back door. And basically, if you ever watch a movie about military guys, is as they're retreating, a couple guys stay behind, and they provide covering fire that's extremely intense to let everybody get out the back door. And I think that's what we're seeing here. I think we're seeing a rear guard action right now. There's a lot of machine gun fire here holding up these indexes, while everything behind it is starting to sell off. And once those guys stop firing, they start running, then it's gonna be too late. So anyway, I thought I'd share that with you, and we'll know. I mean, if by the time March ends and we're at new highs, and then I'm gonna have to think a new way that trading works, because then something else has happened, and so I just want you to guys be aware of it. I think March is going to be a big tell. Anyway, you guys have a great weekend. I have a lot more to share with you and get you prepared for next week. Thanks. Bye.